What is good, YouTube? It's More Money Syndrome, and I'm back with another video. And today we're going to be teaching you guys how to read candlestick charts. And you may be asking yourself, especially if you're a beginner, what is a candlestick chart? So basically, a candlestick chart, in layman's terms, would be just a universal language that the market uses to talk to one another. So whether you're trading Forex, crypto, futures, or the New York Stock Exchange, they all speak the same language. Money all speaks the same language. And another way to explain a candlestick chart would be a sort of representation, visually, of course, on price movement, whether it's up or down or laterally in the market. And this could be over a specific amount of time. So whether you're looking at it for 1 minute, 5 minutes, an hour, 4 hours, 24 hours, a year, 5 years, so on and so forth. And let's say, for instance, right now I'm using just a website called TradingView. Just it's basically what everyone uses when they day trade, just to look at the market. Um, so we're looking at the last hour of the S&P 500 before the market closed at 5 o'clock. So let me show you what you guys are looking at. So right here is a downtrend, obviously. As you can see, the candlesticks are all moving down. As when you're looking at the chart, I'm gonna give you guys 30 seconds. Actually, that's too long. 5 seconds to see what you guys are looking at. If you could explain it to me. What do you guys think of when you see this chart? All right, and if you guys are beginners, let me show you what you're looking at. So right here, we see there's a downtrend going on, obviously. The price is moving down, and we would call this a bearish market when the price is moving down. But usually bearish means the price drops between 20% of the highest point. But that's another day for that. This is for beginners only. So when the market first opens, we have something called an open price. And when the market closes, we have something called a close price. A high price in a specific amount of time is the highest high or the lowest low. So in this specific bearish market, we have a trend going downwards, right? We have a high right here. Right here we have a high. We have another high here. And we have another high here. All three highs, but they're all in different points, right? Separates them is a lowest low, and that is only for bearish markets. So when the price is going down, you'll have a high point, and then it will drop down and stop, have a low point, come up a little bit, come back down, and it's all going to be lower than one another, the highs and the lows. So that's how you could look and see if it's a bearish market. Vice versa for a bullish market. Let's pull one up. This is what it looks like when it's a bullish market. And the way I like to remember the differences between the markets being bearish or bullish would be how the animal attacks. So bears usually stand up on their back feet and claw down, making it a bearish market would be something that's going down in price. And vice versa, bulls like to use their horns and go up. So that's how I like to remember it. So right here would be a prime example of a bullish market. We can see that we have right here, we have a high, a low, high, a low, and they're all succeeding one another higher points than before. As you can see, this low is lower than here, and this low is lower than here. This high is lower than this high. It comes up. This low point is higher than this one, sorry, and this high point is higher than this one. And this is what it looks like when we have a bullish market. And this is universal, like I said. It could be for crypto, forex, stocks, futures, etc. Anything that speaks money, basically. All right, and let's talk about the candles themselves too. So, what you guys are looking at here, you see a whole lot of Christmas tree, red, green, all that. So basically, what these candlesticks are indicating here, what they're saying to me is the length of them is usually universally meant to be a representation of the volume size. So whether there's a lot of sells or a lot of buys, the length here would show me that it's a lot of volume going on, whether it's selling or buying. For instance, this little one right here would be a little amount of buying, more than this one. And then we have this long green one, pause, and that one would mean there's a lot of volume going on. It's a little bit more advanced than the other ones I was talking about. This pattern right here that we're looking at would be called a reversal pattern. So whatever the trend is doing, the reversal of that would be the succeeding trend. So right here, this is a downtrend that we're looking at. Right here, we have a head right here, and it's called the head and shoulders trend. Shoulders, shoulder, head comes from going in the downtrend to skyrocketing actually into a bullish market. I've been trading for a couple years now, and this is all stuff that comes with practice. There's a lot of good websites. Like I think I'm actually not affiliated with any, so I'm not gonna give you guys any. But you can find them yourselves. There'll be websites that basically give you just fake money to trade with the live market so you can get practice. It's kind of like basketball with repetition, makes your skill better. So just, it takes patience, time, but after a while, it's not rocket science. You'll figure it out. It took me years to become actual like profitable. So just be patient and stick in there. You guys got it. Like always, we're almost at 2,000 subscribers, so make sure you guys like, sub, share the video, and leave comments down below what you want to see as my next video. Thank you.